Hey everyone, welcome. We'll just wait another minute, second to let a few more people in from the waiting room, and then we'll get started. So we're here for today's Liquid Assets webinar focused on water markets. I am Caitlin Coleman, Water Education Colorado's Publications and Digital Resources Managing Editor, and I'm excited for our program today. If you aren't familiar with WECO, we work to ensure that Coloradans are informed on water issues and equipped to make smart decisions to guide our state to a sustainable water future. We do that in a whole variety of ways. Some of you have gone through our leadership programs. We offer in-person educational programming. We have our annual River Basin Tour coming up next week in the southwestern corner of the state. So join us if you're free next week. And then we also, of course, offer online educational opportunities like today's webinar and publications and fact sheets. So learn more about all of it at watereducationcolorado.org. We'll hear from our four phenomenal panelists in just a minute. But before we get started, a few just housekeeping notes. We'll reserve the last 20 to 30 minutes of our time together for Q&A today. So as you listen and questions pop into your head, know that we'll address them closer to 1 p.m. You can either type them into the chat as they occur to you or save them for later and type them in later.
Zoom, actually.
You can also use the chat at any time during the webinar to ask questions or communicate issues. Tess Koskovich, our marketing communications and outreach manager, will be monitoring that chat. Try to remain muted throughout the presentations. We'll invite you to unmute and turn your cameras on if you have them off during the Q&A if you like. Our webinar is being recorded, so I'll email you with the recording sometime over the next week, and it will be posted on our website as well. I think those are all of the housekeeping notes. So let's get started. Some very quick background on this. We try to produce a webinar to accompany each issue of Headwaters Magazine, which is WECO's flagship publication. Our spring issue of the magazine was also entitled Liquid Assets, and it focused on kind of some of the same themes of the webinar today, shifting water markets and the risk and possibility of speculation. So today we're going to get into a bit of that and some other things too. Take a good look at Colorado's water markets. We'll hear from Adam Jokerst, the Rocky Mountain Regional Director of Westwater Research, Kate Ryan, the Executive Director of the Colorado Water Trust, James Eklund, who's an attorney with Taft and also a rancher with a family ranch on the West Slope, and Pat Wells, who's a water strategy specialist with Northern Water. With that, let's get started, and I'll hand it over to Adam.
Well, good afternoon, everyone. I'm going to share my screen for a few slides here. Is that working? That doesn't seem to be working.
Not seeing anything yet, Adam.
Of course.
Do you want me to try to pull up your slides? Give it one more try. Oh.
How about now?
Think we're getting there. Yep.
Yep. Okay. Got it?
Yes.
Okay. Sorry about that. Again, Adam Jokerst, I'm Regional Director for Westwater Research. Westwater is a water economics firm. We track the water market in Colorado very closely. The water markets all throughout the West. And we use that data for valuing water, for advising transactions, for providing market consultations, and just generally consulting anywhere that finance and water meet. This first presentation is just on the overview of the Colorado water market. And I guess first to kind of describe what that market is, I've listed 5 different types of assets, types of water rights, or water entitlements that are commonly transacted across the state. Ditch shares are probably one of the most common sources of common types of assets that are transacted really throughout the state. Um, they are often either transacted amongst agricultural irrigators, or they're transferred to municipal users who will change those through water court for municipal use. Transbasin sources, Colorado has a long history of developing transbasin sources. Over 500,000 acre-feet of water is imported from the west slope to the east slope. Typically, the assets that are transacted are contract units in existing projects. So Colorado Big Thompson or CBT, Windy Gap project units, Twin Lakes are examples. Groundwater is also transacted, Denver Basin non-tributary groundwater rights, as well as rights in designated basins. Tap credits, those are contract rights that are formed whenever an entity pre-dedicates water to a municipality and receives a contract for a water tap. And then augmentation credits organized through augmentation providers and decreed under an augmentation plan. These are just 5 of the most common assets that are transacted, but there are many, many others. Private rights, more sophisticated swaps, irrigated land are all are all examples of trades of water rights. Where are these water rights going? This graph shows the transfer of water from the left would be the seller, and on the right would be the buyer. So the old water use and then the new water use. You can see that of all the transactions across the state, 2/3 are being sold by people in the agricultural sector. So water is leaving agriculture. 83% of the buyers are municipal. And that's in the total acre-foot volume of water that's transacted annually across the state. So if we look at it from a macro level, there's a large-scale transfer of water, or reallocation of water from the agricultural sector to the municipal sector. And I think that, this data bears out what we see on the ground with, cities growing over formerly irrigated lands and in some cases buying dry. The municipal market dominates Colorado. It again is where over 80% of the water is transferred to. And some of the factors that give rise to that is it's a highly fragmented market. There are over 70 water providers on the Front Range from Wyoming to New Mexico. There are 70 different entities that are competing for water. And within each of those, the municipality itself is buying water, but oftentimes developers and home builders are also in the market, creating competition. Most municipalities in Colorado require permanent dedication of water. And so we see permanent sales of water rights predominate the water market. That's unique to Colorado. Many other states in the West, we see more of a leasing or temporary market. Colorado is very permanent focused. These markets are very local, hyper local, because unlike other states, Colorado does not have a statewide water system. We're not able to move water for multiple parties from the Northern Front Range to Pueblo, for example. Compare that to like California, where the state water system allows transfer of water from Sacramento to San Diego. Sources are becoming constrained, particularly those sources that municipals have historically relied on, like CBT, and new sources are rare. And that again is what is leading to this reallocation. This map shows where we see it's a heat map of transaction volume and value, and if the volume's on the left in blue, and you can see that there's a concentration along the Northern Front Range, and then again out of Pueblo Reservoir, and this includes leases and sales. We also see a hotspot over on the Roaring Fork, which is a lot of lease water for environmental purposes. But if you look at the value, that's on the right in green. Really, it's the Northern Front Range that dominates the transaction value. Um, Water prices in northern Colorado are among the highest in the nation. This stacks us, Colorado, up against other states across the West. Again, value is now on the left in green, volume is on the right in blue. Starting with blue, Colorado, on average, or over the last, I think this is over the last 8 years, 800,000 acre feet have transacted, which is a lot of water. But compared to some of the other states like California, where over 13 million acre feet have transacted. But Colorado, even despite that smaller volume, has one of the highest values, second only to California, again, indicating that we have high prices here. This shows some of the trends over time. The value we're seeing, increase largely in line with home sale, new starts of homes. Again, that's what really drives the market. The average unit price is also increasing, generally above inflation. A point to make is that not all water is created equal. This graph shows the price of CBT in blue compared to ditch company sales, sales of ditch company shares in northern Colorado compared to Denver Basin groundwater sales. And one thing that stands out is that there's quite a spread. Water prices are highly variable. Again, all water markets are local, but these different classes of shares really indicate how usable these are to the municipal users. Again, municipal users are what drive the market. So CBT is very usable. It's deliverable out of storage, does not require a change of use through water court. It commands some of the highest prices. Ditch shares, less so. And each ditch share has its own set of circumstances for what impact its value, including its seniority, its availability, reliability, and transferability. And then groundwater at the bottom here, we're actually, whenever you convert that into real prices, whenever you incorporate it, inflation, we're seeing a decline in prices over time. I threw this in the last minute, but often it is, I see these headlines that say water is the new gold, and I just pull a few headlines from Google of where water is the new gold was mentioned. Just curious of how water stacks up to gold, actually, in terms of return. So I looked at the 20-year return of gold versus CBT. CBT, we have the most data on. It's kind of a benchmark for water. As well as the S&P 500 and what a 20-year treasury note would yield. So water has beat treasuries, but it's definitely no gold. So I would say if you have a choice between the two, stick with gold. Looking ahead, we see several, this was some prognosticating on what the future of the water market might look like. Every point has a question mark because we don't know. I think stresses on large sources like the Colorado River, how far we allow reallocation of water from agriculture and what new industrial demands come online are some of the biggest factors. We're seeing a wind down in certain industrial water uses, but potential new industrial water uses for data center cooling, chip manufacturing, hydrogen production. And I think those will have big potential impacts to the market. I think we'll see more sophisticated transaction structures, collaborative water sharing agreements. I still call them ATMs, but I'm trying to train not to say that. Water banks and then public-private partnerships are all potential opportunities, I think, for more sophisticated transaction structures that will allow potentially non-permanent transfer of water. And then regulatory, I think that's going to be some of the conversation later on, potentially around anti-speculation, but also what is the macroeconomic environment in Colorado? Will we continue to see the same kind of new housing growth that we have seen over the past several decades with the cost of housing, with the cuts in federal funding? Um, all things to track. So Colorado water market in a nutshell. I'm looking forward to questions later.
Thanks, Adam. And next up, we're going to hear from Kate. So I'll turn it over to you.
Right. Thanks, Caitlin. So part of my job today is to talk about how we got to this relatively complicated system of water markets that Adam just spoke about. And so what I'm going to do is I share my slides. I just have a couple of slides. All right. I'm going to go back in time just a little bit. Let's see. Not playing. There we go. So going back in time, as early as 1861, Colorado started what other states even call the Colorado Doctrine. So our system of prior appropriation, before we even became a state in the 1860s, the Colorado Territorial Legislature enabled water users to do what became known as the Colorado Doctrine. Basically, that was you could take water out of a river or a stream and transport it via ditches, canals to your own place of use. And beginning in 1873 in our Constitution, we had our Constitution recognized the system of prior appropriation. And so everybody who was using water went to water court and got their water rights recognized, assuming that they knew they needed to go to water court and get that done. And so if you have a water right, you have an appropriation date associated with your water. And everybody's basically gotten in line with their system of water rights, which have their dates of appropriation assigned to them. So if you went to water court in 1890 and you wanted your irrigation use recognized that you had started using in 1880, the court would give you a decree recognizing those dates associated with your water right. And even as early as the 1900s, however, there wasn't enough water to go around for everybody who wanted to use it. So the system has been really important to recognize who gets water when it's available. When there's a shortage of water in our systems, the water rights that were decreed more recently get shut down first. And those that were decreed in the first place have more senior priority dates, and those are more reliable water rights. So what happens today, which is why we have such a robust and complex system of water markets, is that you probably, if you want to use water, you don't really want to go out and appropriate a new water right. You might want to do that because you could get water from the stream if it's available. It would be free to you, save the legal costs of going to water court, but it would be really junior and it would be unreliable. So if you really want a dependable water right, what you want to do is work with somebody who already has a water right that was decreed early on. You would want to purchase that water right and use it for your own purposes. And the way our water courts work, you can do that. You can purchase a water right, for example, on this slide that was decreed with a 1900 priority date. You can go to water court and you can change that water right and use it for a new purpose. And when you do that, assuming you've gone to water court, you get to retain that senior appropriation date. So that is essential for the way our system of water rights continues to work today. It's something that, we had put in place by ranchers and miners in our state early on, but it still works relatively well today to create a system where, if the economics are driving something that you have a new use for water, it would be valuable enough to you that you would go out and try to purchase a more senior water right. That's what Colorado Water Trust does when it's trying to get water rights that it uses for in-stream flow together with the Colorado Water Conservation Board or for other environmental uses. The state does have a junior appropriation system where the CWCB can go out and get junior in-stream flow water rights, but Colorado Water Trust, our purpose is to get some more senior water back into our streams and rivers across the state. This is an example of one project that we worked on. This is on the Little Cimarron. There's a ditch called the McKinley Ditch, which was decreed by the water courts in 1894 for irrigation. Almost 20 years ago, that water right was associated with a ranch that was subject to foreclosure. And the Water Trust ended up going in and purchasing that water right. We went to water court and we had the water right changed in water court. So today it can still be used for irrigation, but it can also be used for in-stream flow in the Little Cimarron River and the Cimarron River downstream. So by doing that, we were able to invest in a water right now that has an 1894 priority. So that's important on this river in particular, because if the CWCB were to try to go in and appropriate a junior water right, there was no water in the river for the CWCB to appropriate. It literally is dry in August and September of many years. But now that the Colorado Water Trust purchased that water right, we can work with the CWCB to protect some of the water in the Little Cimarron River. What we actually do with that water today, we continue to own it, which is interesting. We own the decree for the Little Cimarron water right. We have granted a right to the CWCB to use it for in-stream flow use for part of the year. We've also, though, granted to the now owner of the ranch a right to use that water for continuing irrigation when it's not being used for in-stream flow. So this picture right here with the cattle, that shows the ranch. It's still a working ranch. It's called the Mighty Zephyr. And the two owners of the ranch today, they have cattle that they raise on that property, and they also grow hay that they sell for horses in the region. One thing that I also wanted to mention, though, it's interesting. We've got this system set up where entities can go out and they can purchase water for new uses. Adam showed that slide. You see a lot of water's been purchased from irrigation and agriculture that's now used for municipal purposes. And that is a transaction that happens relatively frequently. Or it's a transaction type that happens relatively frequently. Colorado Water Trust has been working on the transactions that we do since 2001, and there are currently about 45 plus transactions of water that have been from either irrigation or industrial. We've also worked with oil and gas water right owners and municipal water right owners to invest in their water and transfer that water to environmental flow purposes. So we're not on par when it comes to number of transactions at all with municipal sector, but we're doing it more and more statewide. And it's also a way where you can now, we've taken the system that was set up in the mid to late 1800s that really envisioned water rights being transferred either between farmers, ranchers, and miners and cities. And we're introducing a lot of new uses into that water rights system now. So it's interesting to me to see how flexible and relatively enduring it is as well. We haven't talked about anti-speculation, which happy to discuss later, particularly if people have questions. But I bring up that number of environmental water right transactions, 45 give or take of environmental water right transactions to make the point that it is pretty important that we keep a flexible system where water right owners are able to engage in transactions without too much regulation hindering them. The prior appropriation system was, built in the 1860s, but it still works relatively well today to get new things done.
Thanks, Kate.
Sure.
So next up, I think we're going to hear from James with more of an agricultural perspective.
Thank you. Can you hear me okay, Caitlin?
Yes.
All right, awesome. Share my screen as well. Right, presentation mode. Can you see that okay?
Yes, it
Good.
looks great.
All right, awesome. Well, this is Plateau Creek running at a level that 2 years ago was bank full, as you can see. This year, we're not going to be so lucky. And the reason I start with this is because we're talking about markets. And when you talk about markets, you're talking about supply and demand. And this year is looking to be quite low in terms of runoff, especially when compared with a pretty decent snowpack. So the reason, and another reason I start with this is because this is the stream that we irrigate from at our ranch on the north side of Grand Mesa. There it is, North Sky Ranch, and we grow high mountain hay for our Black Angus cattle and feed to them and graze them on pasture and on BLM and Forest Service in Plateau Valley, Colorado. So this is a really important topic for everybody in our state. But for agriculture, this is aptly titled liquid assets. They are assets. Water rights are, in many cases, your best performing asset if you're in agriculture. Depending on commodity prices, right now, beef prices are pretty good, actually very good. But that does not hold, as we know, and water valuations, as Adam's graphs have shown, are a little bit more reliable. They're not gold, but still they have appreciated year on year in Colorado. So the source of supply, who holds Colorado's water rights? Again, as Adam said, ag is the dominant user and supplier of market water. 700. There are over 700 ditch and reservoir companies, mutual ditch companies, that hold much of that water, and we'll talk a little bit about that in a second. But these rights are not necessarily plug and play assets the way some others are. And so that they're legally and operationally complex, and they're limited depending on the law and the policy that is in place affecting them. So before I leave this, just in agriculture, it is true in the urban setting as well, but in agriculture, these are not just transactions. They can be transformative for the communities that rely on that agricultural economy. So markets are only as flexible as the law allows. You heard Kate give you a great background of why we've adopted the doctrine that we've adopted of prior appropriation here. We have water court. It's just us in Montana of the 50 states that do it this way. Everybody else parks it in an administrative or executive branch of government that handles it through a permit or something like that. We do it this way so that all of us water lawyers have jobs. In seriousness, we set it up in the judicial branch of government because we knew that it was going to be a contentious fight over who could use it, when they could use it, and if they wanted to change aspects of their water right, there needed to be a forum and a footing that would allow for easier resolution of the issues. So that's why we put it where we did, and it's been there since we were a territory. Historic consumptive use analysis is incredibly important to the value of your water right. In fact, it is the value of your water right. It's not the diversion. You can, have a decree that tells you can divert 20 CFS to 20 cubic feet per second at your head gate. But if you only use one CFS, then that's the value of your water right, not the diversion right. The return flow is why, the protection of return flows is why that is the case in our water law. Infrastructure is critical in Colorado, in most Western states, to putting that water to use. So there can be limitations based on your infrastructure, either practically or legally, that allow you to take water or prohibit you from taking water, either in volume or in times of the year. Ditch company consent, like I said, there's just a absolutely massive amount of this water that is held by mutual ditch companies in Colorado, and they each have their own special articles of incorporation and bylaws and their ways of doing things, and typically their consent is needed in order for a transaction to move forward using shares in those companies. And then anti-speculation, as was talked about, and I encourage you here to pick up a copy of Headwaters. It goes into the multiple different perspectives and the history around how we came up with an anti-speculation doctrine in Colorado. It's worked well, and it's been a topic of conversation that is covered really well in that Headwaters issue. So pick that up if you haven't already. Okay, so from buy and dry to creative supply, that's what we've done. We've tried to incentivize people and transactions in the state water plan and elsewhere into moving from the picture on the left of your screen to the picture on your right, which is a pretty dramatic difference. As Adam said, permanent ag to municipal transfers still dominate the space. I'll just remind you of this really good graphic that he showed. That's the trend, and that's where the water is going, is from ag to municipal uses. So but ATM's alternative transfer mechanisms, not a cash machine, although I argue they should be, they offer a middle path to doing these transactions, allowing them to occur, but in a way that hopefully avoids that picture on the left. How do you do that? Well, you can conserve water in agriculture 3 real ways. You can fallow and set up a lease fallowing type of arrangement. You can deficit irrigate, meaning you use less of your, not the entire 100% of your water right to irrigate in a given year, and then you can crop switch. And if you crop switch, you're taking typically a water consumptive crop that and exchanging that with a crop that doesn't take as much water, and you've got some savings or some conservation in that delta. Interruptible supply agreements are mechanisms to do all 3 of these different mechanisms. But you need, in order to make this work and make it a market that is going to be taken advantage of by people and actually used, you have to have legal certainty and shared incentives to do that. So if you've seen me present before, you are tired of this map. It's John Wesley Powell's map of the country. He thought these should be the states, the state boundaries. And obviously we didn't do that. We did this. But the reason I show that here is because of the 100th meridian that he drew on the map. So it's the line of demarcation between where you need to irrigate things in order for them to grow and to the east of that line, you don't. Humidity, temperature, and and precipitation can get you through a growing season typically. However, that is shifting. That line that he drew, basically bifurcating Kansas, has moved to the east. And this is old data. This is 8 years old now, but I can't find a new updated map. The blue dots on this map are increases in irrigated acreage in the country. So you see the 100th meridian, or that line of demarcation, is really migrating east and migrating east fairly quickly, where irrigated land is being put under irrigation because they want to hit the root zone more reliably, and the effects of climate change are not allowing that to happen as they once did. The red dots are where we've taken land out of production, agriculture, or out of irrigation, at least. Some of those red dots, I'm sure, are dry land farmed, but they're not being irrigated now. So you can see it's a fairly dramatic move of irrigation to the Midwest, which is increasingly interested in how we're doing markets and how we're doing irrigation practices out here in the arid West, because they're starting to adopt some of the same things that we do here with side roll sprinklers, center pivots, irrigation techniques that they used to, not need. They now want to employ. This is a map of by county. If you were to map the ideal growing conditions for corn and soy in the country in 2016, as run through artificial intelligence, on your right side of the screen, 2064 would be the projected ideal growing counties for corn and soy. The market difference between these two maps is dramatic. You're not growing corn and soy in Nebraska, the Cornhusker state, so I don't think they'd have to change their mascot, but they may want to if they're not doing that anymore. So the markets and the economics change dramatically if this is where we're headed on the right. Lessons from other markets: we're not the only game in town or on the planet, for sure. Australia, California, and Chile have each experimented with markets, and the innovative parts of those are probably known to most of the people on this call, but there are cautionary tales to be told and learned in each of those different experiments. I'm not going to read the slide to you, but that dynamic means that there are best practices that Colorado can look to in making sure that its law and its policy reflect what has been learned in each of these different markets and what we've learned ourselves. Because as Adam said, we have been very aggressive and one of the top performers when it comes to water rights transactions. The future as a ag, this is my thesis, needs to be a market maker, not a market casualty. Ag should co-design Colorado's water markets. The tools that are needed to do that shaping are legal incentives and policy guidance, deal templates so that the transaction costs and the way that you get these deals done is more efficient and less costly to the participants. And then the transparency and reliability of water in the market is critical. So water markets can build resilience if agriculture stays in the game, because as Pretty Boy Floyd, I think, was the bank robber in the 1920s that said, they asked him, why do you rob banks? And he said, well, that's where the money is. Well, why do you have to talk about agriculture and water markets in the West? Because that's where the water is. So there's a really virtuous cycle that I'm hoping that we can achieve in Colorado. We will be a template, or we will be looked to by other jurisdictions. when they are evaluating markets, just as we've looked at other examples. They really can solve problems or they can cause them. The difference is the design. And I think a market that makes payments or facilitates payments to agricultural producers allows those producers to increase flexibility to adopt regenerative agricultural practices that saves water, sequesters carbon, and builds healthy soils. That in turn can slow climate change and aridification, or at least in the microclimate near a production. And that in turn will lead to better agricultural conditions and greater resiliency, which ultimately increases your yield and puts money back into the pocket of the producer. So that's the virtuous cycle that I'm hoping we can achieve. There is a product called WaterCard that is talked about in that Headwaters issue, and I'm happy to talk more about that in the Q&A, but I will stop there and thank you for your time. Thanks for including me in this.
Thanks, James. Now we'll turn it over to Pat before jumping into some questions.
All right, thank you, Caitlin. Good afternoon, everyone. I'm here to talk, really round out the previous speakers and their great remarks on water markets and kind of get a little more into the drivers for why different water users attempt to access the markets, and then talk through a little bit about what the other drivers are and motivators are for those seeking to buy water and sell water, and then have a little more of a holistic conversation around what other effects need to be considered or what other factors need to be considered beyond just the water markets. So let's talk a little bit about what is causing people to need to access the market. And really the water market has changed substantially over the past 20 to 30 years. There's a lot of emerging water supply drivers and risks that we are all faced with every day that are causing water managers throughout Colorado to change their calculations, to look at their water portfolios, in some cases to seek diversification, to rebalance their portfolios, and to develop supplies that maybe weren't originally forecasted in their previous integrated water resource plans or water supply plans or even on-farm plans. So the first and maybe most obvious example is just the effects we're seeing with climate change, increased hydrologic variability, and persistent drought. So as water providers are evaluating the robustness and the reliability of their system, they're testing against not only historic droughts of record, but future scenarios involving potential warming and drying. And what they're tending to see is that their systems aren't performing, in some cases, as well as originally forecast. So that's causing them to reevaluate the need for water and the timing for water. And in some cases, it is driving them to the market earlier and faster. Another driver, particularly since the mid-1980s, in the era of NEPA and the Wilderness Act and County 1041 regulatory processes and other processes for vetting water supply projects that were largely based on new water appropriations or conditional water rights. Starting in the mid-1980s, we started to see these projects become much more difficult to permit and to build, and the success rate went down. So Two Forks is a good example of a project that would have been a regional water supply project to serve the Denver metro area, whose approval was vetoed by the Environmental Protection Agency. And what that triggered in the South Platte Basin when that veto occurred was really, it was like everyone had their bag of marbles together on a regional project. And when that veto occurred, it was like the bag of marbles spilled to the ground, and everyone who needed water kind of all started pursuing water on their own or through different regional projects. And so we started to see a lot more pressure, particularly in northern and northeastern Colorado, of entities like Thornton and Aurora and others seeking to acquire water from agricultural areas and from other river sources to offset the loss of the project that they had on the books and planned for several years. The other thing we've seen in recent years, if you looked back 30, 40, 50 years ago, we didn't fully appreciate the connection between groundwater and surface water to some extent. We also didn't really understand the nature of non-renewable aquifers like the Denver Basin aquifers that underlie a good portion of the Front Range. And so as we've updated our models, as we've gained a greater understanding of subsurface hydrogeology and other factors, a lot of these communities, particularly in northern El Paso County and Douglas County, in other areas along the fringe of Denver proper, have realized that they need to seek renewable water supplies, and that continuing to mine groundwater is not going to be a winning proposition. So that's caused many communities not only to need to plan for their future growth and what their future water supply plans are, but in some ways develop a backfill of supplies for the Denver Basin groundwater and the non-renewable supplies that they already have in their portfolios. And then finally, we couldn't have any conversation around water and water reallocation without talking about Colorado is an attractive place to live and work and recreate, and the projected population change that we've seen, that we've been talking about for decades, whether it was the statewide water supply initiative, SWASI 2010, the Colorado Water Plan and subsequent iterations. We've known for a long time about the population, the challenges with population growth, the water supply gap that is emerging and is going to grow over time, and the need to find long-term durable solutions to not only deal with the various water supply risks that are growing every day, but just the supply and demand equation that comes with a growing population in an attractive state to live in. And then finally, I'd like to note that I think many water providers, particularly as they've gone through the 2002 drought, the 2012 and 2013 drought, 2018, as they deal with these emerging water supply risks, and as they learn more about their systems and test them and stress test them in different ways, there are a lot of water providers, a lot of city councils, a lot of utilities boards who are maybe shifting their risk profile. And I would note that a municipal risk profile is probably a little different in many ways than an agricultural risk profile, where maybe agricultural entities are willing to roll the dice a little more year to year and get very creative with finding alternate sources, or fallowing crops, or working in other ways. Municipal water providers have just a fundamentally different risk calculation. And it's been my experience that I've seen them in certain cases become more risk averse over time. Again, seeking to acquire water earlier than they might have historically, acquiring large blocks of water, even if they don't need that water today, but just to have that certainty of we've got the water under our control, and if we need it, we can access it, particularly given maybe some of the lack of success or mixed reviews that have come around ATMs and water sharing agreements, and how successful those have been over the past 20 years in achieving certainty for a municipal side, while also keeping the water rights in agriculture and keeping agriculture sustainable and local communities sustainable. And then finally, I think it's just really important to note that we're at the end of what I would call the era of cheap water, and that there really aren't many areas of the state left where a junior water right and a junior water appropriation, as Kate had mentioned, will yield much water reliably, particularly not without a lot of storage. And so we're really entering an era of where we're shifting from an era of water appropriation to reallocating water from one use to another, as the speakers before me have really done a good job explaining. And then you add into this other emerging issues, whether it's compact compliance issues that we face in multiple river basins, whether it's recovery programs that we have along the South Platte or the Colorado River Basin. All of these are adding up to everyone really kind of taking a new look at what their water future looks like. So if we look at Northern Waters service area, we serve 8 counties in northeastern Colorado. We provide a supplemental supply of water through the Colorado Big Thompson project to supplement native water supplies in our 8-county region in northeastern Colorado. If you look at how our water market has changed and how our user base has changed, when the first CBT project deliveries were brought through the Adams Tunnel in 1957 and the project was declared complete, our district population was only around 150,000 people. And the ownership of CBT units and really the project really resided about 85% with agriculture and roughly 15% with municipal and industrial uses. And then during that time, even though we had that kind of ownership split, deliveries of CBT water were very heavily weighted toward agriculture. So only 3% of CBT deliveries upon project startup went to M&I uses. And then if you look at how we're comprised today, our district population is well over 1 million people. Ownership has shifted heavily toward M&I use, where M&I ownership represents over 70% of ownership of CBT units. But you'll notice that the deliveries have not, they don't quite match up the ownership. So ag deliveries still comprise around 43% of total deliveries, while M&I, which tends to be the first use of CBT water, comprises about 50% of deliveries. So you see that shift, but you also see kind of the unique nature of the CBT water market and how a lot of our programs, like our carryover program, a regional pool program, a very active CBT rental market where cities will rent their excess CBT supplies to agriculture. Just the flexibility of how CBT units can be used has really helped sustain agriculture in many ways, has helped meet the needs of water users in our region, and has created both an active water market, but a very robust way to move water throughout northeastern Colorado. I won't spend too much time on this, but I just wanted to talk a little bit about the kind of 3D chess that goes into the calculations for acquiring water, and what a water resource planner or a water rights engineer is contemplating when they are looking to access the water to acquire new water rights. So obviously the water rights seniority, your place in line, is one of the things that you'll look at if you were to get a call with someone looking to sell their water rights. If you were to approach a water ditch shareholder to inquire about their interest in selling water rights, you're going to look at their seniority. You're going to run estimates about the anticipated water yield that could come from those water rights. And then you're going to also look very heavily at the historic consumptive use patterns and the history of use. So if you had a water right where the ditch was out of service, several years in a row, or they were not keeping up with their maintenance, you would tend to see a lot of zeros in the historic consumptive use record. And that water right would be much less attractive to acquire versus a water right with a really nice, reliable history of use, with good records, with nice cropping patterns, with a ditch where they take care of it and keep up with their aging infrastructure. Also, you may look based on the water shares that are involved. If those shares are paired shares that include additional Trans Mountain water, you want to make sure that that water could be taken with the native water that leaves. CBT is a good example of CBT units cannot be taken out of Northern Waters district boundaries. So you would have to sever that from the rest of your water purchase to make sure that that's in compliance with policies and court rulings and such. All of these play into due diligence factors. So when you are looking to acquire water rights, there are just so many things to look at, whether it's the share trace and the share history, whether it's your legal risks, whether it's what we've mentioned with the reliability of water rights. And once you do that, you also need to start looking at your ability to deliver water to infrastructure that you own or that you can access, as well as how you will get that water to your new beneficial use that's in a different location. And so there's a lot of water rights that just aren't a good fit with the system that you own. And so you may end up not being a taker on the market for water rights that are up for sale just by virtue of the infrastructure you own or the cost to build a new additional infrastructure to acquire that water once you close on shares. There is this idea around fit. So a lot of water providers have very broad, flexible decrees, tend to be older decrees, where they just identify certain water types that can fit in those decrees. So there's kind of a momentum to acquire water shares where you may have historically been part of a ditch company where you have other water rights assembled in a geographic location. And so the more plug and play the water is for a particular water user, the less hassle you have to go through, the more attractive it will be to you. And then obviously there's other factors, more the relationship between the buyers and the sellers, the timelines to close transactions, and then of course, cost. So as far as emerging issues and trends that relate to the water market and influence how folks interact and engage in the water market, the water markets, as we've mentioned, are changing as these more flexible water sources find their homes. There are numerous communities that rely, for instance, heavily on CBT water supplies that also own native water supplies that are going to have to, in many cases, go through complex water court change cases for the first time, or they very rarely historically have had to go through a complex water court change process. So we're going to see more of that. We're going to see them accessing more ditch company shares, more potential for more ag transfers. Developing these additional water increments is going to become more complex, more competitive, and more time consuming. So as the market tightens, as water becomes more scarce, you're going to have to do a lot more work across the whole life cycle of a water right to get that make that usable in your system, while at the same time competing more with your neighbors, competing more potentially with those from outside your region who may be looking to acquire water rights from 100+ miles away in your backyard and moving it to their end use demands. And all of this is just going to become time consuming, which is kind of speaking to why a lot of folks are acquiring water rights now, because they know it's going to be a long process to get across the finish line. Some other more philosophical comments, which we've touched on, is, given the current state of affairs, there's an open question around, is buy and drive agriculture becoming the default means for developing water? As it becomes more challenging to build large water infrastructure water projects, new appropriations, Trans Mountain diversion projects. In many ways, I think certain water users view buy and dry as kind of the default or the easy button of developing water, or at least developing and holding water. Increasingly, I think we're seeing, and this will get into water speculation later on, the role of third parties providing what I call turnkey solutions, where they will take water shares, they will take what one broker had described to me as we'll take a clean, dirty deal, and that's a really complex, messy deal, and we'll clean it up for you, and we'll repackage it, and we'll sell it to you, albeit at a premium, but we'll do the heavy lifting. And so there's a lot of concern about that and what happens, say, when a municipality is not in frequent contact with the seller of those water rights and not able to develop those relationships with the agricultural ditch company, the shareholder, and the local community. And what we're seeing there is a lot of growing tension around the transparency in water transactions. So if you think about a traditional water supply project that's more of an infrastructure-based project, there are numerous opportunities from the time that project is envisioned through the time it goes through planning and permitting and construction for the local communities to voice their concerns, to make sure that their local communities are kept whole, and that if that water leaves, that there are mitigations or offsets to preserve quality of life and local economies and the environment and recreation and such. Right now, the water market, there's no built-in process that you'd see for that, like you see through an environmental impact statement. And so there's a lot of discussion about, well, there should be willing buyer, willing seller transactions, and you shouldn't interfere with that. But there's this growing acknowledgement of what I call a community protection mindset, where the local community is really seeking to make sure that their future opportunities are preserved and not infringed on, and that when water leaves, the wealth of their region doesn't leave as well along with it. And all this to say, and to kind of wrap up, it's important to recognize that water markets don't reflect the fully loaded cost of acquiring and using water. There are increasing cost pressures for water acquisition. So you're not only where historically, as Kate said, you could appropriate water and basically do that for free outside of your water court costs. Now you're having to pay potentially for the value of the changed water right, the offsets to the local community, additional infrastructure you're going to have to build to get that into your system, and then ongoing O&M to get that water delivered into your water supply system. And then obviously the larger discussion about how we minimize the impacts of buy and dry and transfers from one water use sector to another. And that mitigation concept will all ultimately be rolled into the fully loaded cost of water delivered to the new end use. So with that, that's all I have. Thank you.
Thank you. So we have about 30 minutes left. I have a bunch of questions for our speakers, but I'm wondering if maybe we should open up the opportunity for everyone here to ask questions if you have anything at the top of your mind. So I think to do that, you can either type a question into the chat, you can turn on your camera and just speak up, you can use the hand raise function, which I think is a reaction on the reactions panel. So as you start to formulate your questions, if I don't see anything pop up immediately, I'm going to jump into one kind of vague question that all of our speakers have talked about. And I'm just wondering if everyone could share maybe your biggest opportunities and challenges when you're thinking about the future of water markets and providing water for all of the things that we want and need in our future. So we can start answering that if any of our speakers want to address that, and then folks can start typing in their questions. I see one popping up already.
Do you want me to answer that one, Caitlin?
That would be great.
Okay. Question about leasing in the South Platte Basin. Yes, so Westwater tracks water activity by collecting comparable sales. And we've, over the years, created a database called Waterlytics. And it has roughly 32,000 transactions of water in it, including sales and leases. So leases on in Colorado are, I didn't mean to diminish them. They're very common. It's just not a way of developing municipal supply like it is in other states. On the South Platte, I actually have the numbers roughly right here. I think it's about $14 million a year worth of leases that we have pricing on. And several tens of thousands of acre feet. I don't have the exact number. And those leases are primarily to augmentation plans, whether those are for industrial or municipal or irrigation use. A lot of leasing between municipal to back to ag. So to Pat's point, municipalities often will buy water in advance of their need and then lease that water back to farmers, sometimes the people who sold the water to them, until such time as the municipalities need. And then there is a very active leasing market to the oil and gas sector. And I saw that question come through as well. The percentage of industrial, I don't know the percentage of industrial use that is oil and gas. It's, I can look that up while somebody else answers the question.
I got your back, Adam.
Nice.
The water plan update from 2023 pegs it at roughly 0.1 to 0.2% of statewide use. So not a ton of water in the grand, scheme of things. But if you zoom in on a specific area like Weld County, it can, be much bigger, 1 to 2% of the total in a county like that, where you've got a lot of oil and gas activity and, a well, and everything's relative in this business. So one well can use, between 2 and 8 million gallons of water. So if you're talking about water for municipal use, that's quite a bit. That, I haven't done the math on how many homes that would provide water to, but if you zoom out, you're not talking about very much in that sector.
And you guys may or may not know the answer to this, but you'll see a question in the chat. Barbara asks if that tracking of oil and gas use includes leases rather than self-provided. Any answers?
I don't know if Pat, you guys track at Northern, like if a CBT share is used for oil and gas, or if that's kind of behind the whoever has the share can kind of do what they need to do with it.
Yeah, I'm not super well versed in that, James. I do know that there's kind of an amount of water that gets used for the initial production, and then that tends to tail off once the well is operational. And so but I don't have any details off the top of my head to add to that part of our conversation.
Back on the topic of leases, when we were kind of preparing for the webinar, Adam and Kate were talking about leases and how, Adam's slide showed that most of Colorado's water transactions are through sales, but leases have been an important tool in the environmental world. Kate, can you say anything more about that? Or Adam, do you have anything to add?
I'd be happy to say a little bit about it. And I apologize, my Zoom crashed, so I'm back. We lease water in a couple different ways at Colorado Water Trust. One of the things that we've done in the last couple years is we've expanded our water leasing program using stored water reservoirs. So when Adam put up the slide and he showed that there's a large volume of leased water transactions in the Roaring Fork, that's water that we've leased from owners of water in Rudai Reservoir that we deliver to the 15-mile reach. That water is decreed for power generation, and Colorado Water Trust leases that water so that we can deliver it to the Grand Valley for power generation, and then it just happens to help the endangered fish. It's a great way for us to operate because it's a lot of water and it's readily available. So significant volume, but we can also work with water users who decide for one reason or another they don't want to use their allocation of stored water in a given year. We can do that. We also do this on the Yampa. Colorado Water Trust is actually the largest water user out of Stagecoach Reservoir. We've been doing that since 2012, and I think it's just interesting to see that there's some storage out there, and Environment is just one of the entities that's able to come to the table with funding in those situations in order to buy water. And that funding is interesting, I think, because it often is coming from corporate support, from corporations who would like to offset their water impact based on their operations in the West in general. So that's one way that we use water. The other way that we lease water is through collaborative water sharing agreements. So that most frequently has been done with farmers, ranchers, and municipalities who have water rights and they want to be able to use that water to help out the environment. There's plenty of situations where we've worked with a water user on a stream and their neighbor has seen what we've done and they're just really concerned because there's literally no water left for the fishing that they've done and their family has done on that stream for multiple generations. And so by leasing water, we're able to go through some slightly more nimble administrative processes compared with water court in order to temporarily change the use of their water. Those are water users who depend on water for their livelihood. A lot of them are farmers and ranchers, and they're making very calculated decisions. We do provide compensation for them at fair market value, and it's a very, it's a decision that water users make and that they're able to make with their water. And it's very well thought out. I think my favorite, one of our partners, Bill Fales on the Crystal River, we talk with him every year. We say, do you want to lease your water this year, late season, or do you want to just use it in your crops? And he'll just say, well, let me go look in my barn. I'll see if my barn is full and my wallet's empty, I want to lease the water. If my barn is not full, I'm not going to lease the water. And so it's a nice layer of flexibility that our system has added onto the prior appropriation system.
Thanks, Kate. We have a question from Kay. Like Kate and James, I think all of our speakers mentioned briefly something about anti-speculation. Can you speak more on your views of how the existing laws are working and potential for changes in the future?
I can take a stab at that one. So one of the examples I put on one of my slides was the country of Chile. And there in 1981, they rewrote their water code so that it basically granted private property rights and in perpetuity, kind of like what we have. The difference was that they set up their market without any state oversight, and they didn't have any anti-speculation doctrine. And it led to hoarding of water, which is exactly what our anti-speculation doctrine prohibits, because there were no guardrails put on it. It was quite literally a free-for-all. And that the backlash to that has meant that they are currently rewriting their constitution to address a number of things in Chile, but the list also includes the way that they treat water and how they allow things to move forward. So I guess the lesson or the takeaway for me in that example would be unregulated markets can erode the legitimacy of the transactions that we've been talking about here as being beneficial. And I know, our anti-speculation doctrine may feel slow and kind of cumbersome to people that want to do transactions, but it prevents that Chilean style market failure that I think we all would agree is not a good long-term setup.
I agree with that, James. And, I think anti-speculation is a hallmark, a bedrock of our regulation of water rights throughout the West, not just Colorado. I do think, though, that speculation just the word speculation has kind of taken a hit. And any transaction is often viewed by some in the public as being speculative. And this is not in defense of speculation, but just as a point that speculation involves taking risk, and in some cases that can be a good thing. Pat, you mentioned that water providers, municipal water providers in particular, are inherently risk averse and may be getting even more risk averse. I think without risk, opportunities get missed and innovation gets stifled. And there is, I think, a place for private investment in water that is speculative. In other words, they are taking a risk and an expectation for some kind of profit. When there is an absence of government entities willing to do the same. And I don't want my government entities taking large risks with my money. I don't think that's the role, but there could be a role for private investors to be in the water market. And I'm very colored by my experience with the city of Greeley and Terry Ranch, where we knew of a potential opportunity to develop a source of water, but the risk was too high to spend public money to develop it. A private developer took that risk, spent tens of millions of dollars of their own money to prove up a source, and because of that, was able to sell it to Greeley and make a profit.
Pat or Kate, any thoughts there? Should we move on?
No, I guess what I might add, which may address Ben Lenth's question, is it kind of relates to this, is I think some of the challenge we have is when a willing buyer and willing seller are seeking to enter into a transaction, there is a delicate period that goes into that transaction that may need, as I discussed, the due diligence period, for instance, where many would argue that there needs to be a non-disclosure agreement, there needs to be a due diligence process and a feeling out period to understand if that water transaction can close. And so that is a pretty delicate period for both on the buyer side and the seller side. And so I think the challenge is trying to understand where transparency fits in the process so that not just any transaction looks speculative or behind the curtain or underhanded to the neighbors that may be impacted by the the water transaction. So I think over time, some of our processes have evolved to incorporate more of that public input, probably not as upfront as most people would like, but at a different phase in the process, whether it is a traditionally in the water court change process where you can address issues of water need and speculation and can and will, but also more recently through county planning processes, through any 1041 permits you need, through applying political pressures. So I don't know that there's a perfect system right now for driving transparency. I know that I've heard suggestions over time about should there be some sort of a review period or an agricultural impact study or kind of other step in the process before the transaction gets approved. But I think we just have to all realize that that does have impacts on the market, on the timing. It may have unintended consequences down the road. So we just need to be thoughtful about what transparency looks like. Because as with anything in water, the devil is always in the details.
I could have just one more point around transparency, which is definitely, I think, a dampening in using water for non-consumptive purposes, whether that is in-stream flow or recreational water rights. Those are water rights when they are going to be changed either administratively for temporary uses or permanently through water court. There's an extra layer that those water users always have to go through, which is we have to file an application with the CWCB and gain approval from the CWCB. So we need to, for those non-consumptive uses, go through an entirely additional administrative layer of proceedings, which is, it's not only an additional layer, but it's quasi-legislative. So that's legal term meaning those applications can be turned down for any reason. They can have additional burdens placed on them for any reason, and everything is public in those proceedings. So price, everything about the water right, how it's going to be used, it's all public, which in many ways slows down those transactions and makes them a lot more expensive for the water users who want to do them. It's also something that we could think about when it comes to anti-speculation. We have pretty good example already in Colorado of water rights that have to go through additional burdens. And so we've got great case studies on what that looks like if our state ever does want to do more anti-speculation law and see what the outcome is.
Now, I think that Tom Gray wanted to ask a question. Tom, do you want to speak up?
Yeah, can you hear me?
Yes.
Yes, okay. Good seminar. Thank you for all the information that we got. I have a question, I guess, to start with. As we begin to see possible deliveries to the lower basin fall short of our obligation as upper basin states, and we're hearing some of the Colorado Water Commission make some talk about some mandatory curtailments. If that's the case, there could be mandatory water curtailments. Bear with me, this is just kind of to set you up. Those kind of curtailments would create water markets. You know, the subject of today's webinar, water markets. Water markets, because of much of the Trans Mountain diversion water is junior and would be first in line if there were delivery obligations to the lower basin. So in the Colorado Constitution, the definition of priority of water use is that domestic water use is number one. It takes precedence over all other water uses. So my question is, do any of you have any knowledge of conversations or possibilities of what the definition of domestic use is actually going to be. And I say that because, of course, some want that definition to be really broad. Those who want to use all municipal uses as domestic use, while others would say that the intent of the framers of the constitutional language had no idea that domestic use was more than drinking and household use. So I'm throwing that out as a question. I don't expect a definitive answer, but I wanted to hear a little discussion, because here on the Western Slope, we kind of see that as the elephant in the room coming if water shortages continue to develop and our precipitation continues to decline. So I'll leave it with that. Thank you.
I have seen that in water court, that clause of the Constitution be used to provide a right of condemnation for new municipal water users. So it would not automatically bump them up in priority, but it would provide them with the potential to bump themselves up in priority or acquire a different water right that they could use that is more senior, but they would have to provide compensation for doing so. I don't
Can I
know.
just interrupt?
Yeah, absolutely.
That's right on point. Thank you. Because that's what I see happening. Of course, the first thing would be through exchange to have someone else make the deliveries for you who are water right holders on the Western Slope, make deliveries for you so that you could continue to use that low priority. Well, I guess I'm mixing terms. Priority in the priority system, not priority as far as domestic use.
Oh, I see what you're saying.
So I think it's going to create a water market. That's what we're afraid of, is a water market that says, okay, now we've got to make, the upper basin has to make these deliveries to the western, to the lower basin. We don't have the water. We're not in high enough priority to, to escape that curtailment. So we're going to have to buy some water and send it down there to the lower basin so that we can continue to divert water through the tunnels. And that's, I think, the biggest market on the horizon. James probably has some ideas about that as well. I'd be interested to hear.
Yeah, Tom, good to hear your voice. So I think we've done about as much as we can, really Herculean work to try and avoid or sidestep calling that question, the one you teed up really well, because it gets really messy really fast. And the position that I've always taken on this question is, do we want the market to be done to us, or do we want to shape the market such that we're the proactive voice and help design hopefully our own destiny. The things that we've done, the measures we've taken to I guess I'm an eternal optimist, so bear with me, but I think we've really done a lot of work to create safe harbors in the CRSP, the Colorado River Storage Project Act projects like Lake Powell, to hold water that we voluntarily conserve. And I'll repeat the mantra that you've heard many for years now, voluntary, compensated, and temporary. If we do it that way, I think there's a good argument that we can make that not only have we not used our apportionment up here in the upper basin, but we are also doing all that we can within the confines of reality and our law to conserve water in a manner that doesn't penalize the agricultural users. And the reason I say agriculture is because, to your point, that's where the senior water rights typically are. And the ability to, make sure that we're not balancing some sort of delivery obligation to the lower basin or to some point on the map on the back of irrigated agriculture. I think that's super important because that's where our senior water rights reside. I could talk on and on about how I think we should be utilizing that safe harbor in Lake Powell. We should have probably been conserving water, not probably, we should have been conserving water for the last 6 years since we set that up in 2019 as part of the drought contingency plan. We have not done that. And I think it's to our own detriment. Utah, on the other hand, is doing exactly that. They have decided to stop waiting for us. Typically, the dynamic is the other states in the upper basin look to Colorado to kind of take guidance or suggestions about what they should be doing or what the river management regime should look like. And, we have taken the position that we're not going to do demand management and we're not going to store conserved water in that account. And we're not even going to do, the system conservation pilot program and create system water through conservation techniques. But Utah has said, well, we're done waiting. We're going to move forward on that. And they are. So I think, we need to be doing better and hopefully learning from what they're doing just to the west.
I'll respond. Thanks, James, for that. And I think you're right. But we have the big problem with money because to put a significant or a usable amount of water in Powell is going to take a ton of money. And even 6 years ago, had we been doing it, now I don't want to be panicking, but as I look at that deliveries to the lower basin, we may not have much time left, and we may be, depending on how obviously the Supreme Court or somebody rules on that whole upper basin, lower basin conversation, but we may be a lot closer than we thought to something mandatory. And I think it's good to have it on our mind. I just don't, I'm searching for someone who has an idea that maybe that I can hear, because I don't have any.
Tom, I love this conversation more than anything else. So give me a call. We'll definitely take it offline, and I'm happy to keep going on it. But I think our organizer Caitlin's going to give us the hook here in a second.
I think so. Yeah, give me a call, James, if you get a chance, and I'll do the same. Thank you. Thanks, everybody.
Thanks for the great question, great response. We're out of time. It's after 1:30. Do any of our panelists have any closing remarks? There's so much to talk about that we didn't get to. So if anyone has a quick thought, you can pop in. And if not, then thank you so much for being here. It was a great discussion, great presentations, and good to hear from folks who are tuning in. So thanks to our speakers, thanks to our attendees, and great to see everyone. Have a great afternoon. Bye, everyone.
Thank you all.
Thanks, Caitlin.
Thank you.
Thanks all. Bye.